Hey guys, I'm Rohit Raj and today we're going to discuss about a topic that involves all of you guys who are watching right now, because it's going to be about the different types of approaches each and every one of us has when it comes to trading in the market. So today's topic is going to be the 5 types of traders and trading methods. On that list comes number 1 is investing. Investing in the sense, for me, investing is everything. So investing is everywhere actually. So when you start a business, you need an initial amount to start with. If you start a shop, maybe a book shop, you need an initial capital to buy a single book and sell it for profit, right? So how investing works in share market? So investing in share market means you buy stocks of big companies that are listed in the share market, which means you buy a part of ownership of the company. So how do you select the companies to invest is you look at the financials and fundamental analysis of the company. So if the company is profitable in the previous quarter or previous years and you think it will do well in the coming years, so that's when you will decide to buy a share in that company. So buying shares means you buy a part of ownership of the company, so that the company pays you out with dividends and also your capital will gain as the company progress. So for example, if the company is trading around a share price of 1000 rupees and it has a market capital of 100 billion US dollars, that means you are buying the share at that price and you expect the market to move more upside, and the company will have a very good time in the future. So if the market capital of the company moves to the 130 billion US dollars, that means your share of 1000 rupees will be 30% plus. So that means you will have a 30% gain in your portfolio, and that's how this investing works. So basically, when you are investing in the market, you have 2 types of profits. One is capital gains. Capital gains means when you invest maybe a 1 lakh rupees in your portfolio, and that 1 lakh rupees turns out to be 1,30,000 rupees, which means you are profited with 30,000 rupees. That is capital gains. And number 2 is you will be paid dividends as profit. That means when you are taking a part of ownership in a company, that means the company is making a good profits in the business, so you will get a share of a profit in terms of dividends per share. And so investing is basically you buy a ownership in a company, and so that is one of your companies, so that you will be getting paid by dividends as profit, and also your capital will gain as your net worth progress gradually in the coming years. Comes number 2 is swing trading and swing traders. So who are swing traders? Swing traders are someone who enter the market at a low price and exit it in a very short term in a high price when the target hits, or even when they see a possible reversal in the market. So swing traders mostly depend on the market structure, where if the market structure is in a buy side, they go for buy entries, that is a long position, and the swing high, they enter the swing low and exit at the swing high. When it's the sell position, they take in a swing high and exit and swing low. So what swing traders do is basically when they find a very good momentum at the support and resistance levels, and they enter at that point and they keep the trade active for a week or even a month until the targets get reached. So the swing trader basically depends on the time frames, longer time frames, where it is 3 hours or 1 day time frame, where they can get a clear structure of the market and the trend. So swing traders basically wait for longer targets than the normal scalping trader. So number 3 is scalping traders. So who are scalping traders? Scalping traders are someone who book profits in a very quick trades. They place a lot of number of trades in a very short term for a very small profit targets. So scalping traders mostly are day traders who use the leverage by brokers, and they use multiple amount of lots to make a small profit. For example, maybe if you are trading crude oil as a scalping trader, if you buy for example at 3000 and sell it for 3005, for that's a 5-point target, maybe for 10 lots with 5-point target is 5000 rupees profits, right? So that's how scalping traders work. Scalping traders are someone who spontaneously think at that point, and they have a good presence of mind, and they need to make good decisions, because scalping is a very fast term of trading, and we need to be focusing on the market structure whenever it changes its momentum. And even scalping traders can't wait for the target for a long time, because when it is in the losing trade, we are supposed to close the trade at a very fast time, because scalping traders cannot bear the loss of more than what they are conditioned with, because they only aim for profits after entry. So scalping traders is a little bit risky when you're not having that much amount in the market, that much amount of knowledge in the market, but it's a very quick profitable trading method most of the day traders use. So number 4 is breakout trading. So breakout trading is something depending on the candle's closing levels. So based on the price action, we draw lines like support, resistance, trend line, channels, wedges, etc. Right? So based on the lines we draw on the patterns, if the candle closes beyond the line, that means the market is expected to continue the same direction for a longer term. That means if the price is breaking the resistance level and closing upwards, that means the entry point is when the candle closes beyond the resistance, and you will go long at that point, and that's the time where the price will reach the next level of resistance. So breakout traders are mostly the aggressive type of traders where they need to put in the trading orders exactly at that point where the candle breaks out, because after that they may not get chance to enter based on the breakout strategy. So breakout traders mostly take decisions faster as the market moves from one level to other, and that's how they react very faster. So they need to think spontaneously also. So because buying at a higher highs and buying at the higher level of the market is not going to be easy decision to make. As the candles break out of trend line level, the market is already in a high position and they wish to go long at that point, which is a risky type of trading for a lot of people, because people can expect a retracement from that point of high, but breakout traders mainly enter at the point of candle closing beyond that resistance level as a buy position, so that they aim for a longer target in the same direction. So number 5 is pullback trading. Pullback trading is also called as retracement trading. The pullback trading is mostly dependent on the market structure. Market structure in the sense buy or sell trend. For example, if the market is in a buy trend, that means buyers enter the market and form an impulse and it will have a correction. The correction is formed when buyers start to book profits, and there will be a small correction. That correction will have a bottom line. The retracement's bottom is the best way to enter a market in a pullback trading. So how to find the retracement's bottom line is you have tools like trend line and moving averages to find it. When the price comes and bounce back on the moving average and the trend line, that's the best way to enter the market, and you can expect a positive reversal from that point in a buy side. So that pullback traders, when we enter at the bottom of the retracement, it's a very less risk to trade, because your stop loss is going to be a very low levels below the nearest support or resistance support levels. So pullback trading is a very safe type of trading, because you enter a market in a very low price in a buy trend. That means you are going to be in profit as the market moves higher, and when it gives higher highs, you are going to make good profits. So that's a wrap for this video, and you will surely fall under one of these categories that I mentioned in the list. So make sure you leave it in the comment of what type of traders you are. I'll make sure to read the comment and reply to you. And we also run a very good Telegram community. The link is in the description if you want to join in. And if you don't have a trading account yet, if you haven't opened a trading account yet, you can click the link on the description and put in your details, upload documents, and open the trading account in 1 or 2 days in the brokerage firm which I use personally. So see you in the next video.